Hi Tezos friends, welcome back for more Tezos technical analysis, and let's just dive straight into the charts and see what's been going on. You can see behind me at the minute we have the Tezos versus Bitcoin 24-hour Binance chart up, and we're just coming in and checking in with our pal after this measured move, kind of more or less, let's just get rid of that for now actually, played out going down to where we thought our target would be here as well in about that 2,420 area. And we came back up and we tested in and around this consolidation phase once again, back into this box, making this look like a sort of fake out, you could say. But of course, you know, it depends on how you really consider these measured moves and whatnot to work. Either that was legitimate and we just didn't get the full thing, which is fine, or indeed, you know, it's maybe it's just a case of that we've come back up and we faked out to the downside, and maybe we'll still get this measured move, but it'll be to the upside. So I suppose I could actually undo and put the measuring stick back on and say, well, where would we be looking at if we were to actually go to the upside? And we can suppose keep these targets back in mind if this was the case. And you saw just before I put that back on, I was moving this down a wee bit. These things are all subjective, and I'm just considering whether or not we're fully inside this or not. Currently, it really depends where you draw it and how you draw it on. But maybe we could be, maybe we are, maybe we aren't. It's hard to say. These sorts of patterns that we use are just really, it doesn't really matter too much. You know, it doesn't matter too much. These are good ways of sort of digesting the information that we're seeing. It helps with our digestive system and all the rest of it. But it doesn't really matter things don't have to happen one way or fully down the way, or else it's just a fake out or whatever. That doesn't have to be that way. So don't put really strict rules on your trading and that, unless you're doing something which specifically does have really strict rules with it, such as harmonics, for instance, where things have to be exact or else they just aren't. So you know, could we be back in here? Could we still be consolidating? Yeah, we could, but do we need to have this on the chart right now at all? I don't really think so. There's really the targets and the levels that we have in mind are still fairly clear. There's this sort of this general area here of which could have been a part of a descending triangle here, and you can see as well then could this have just been the fake out of this thing? We're back inside it and we're still yet to do it. You know, of course, you can debate this any way you like. I'm not going to debate it with anybody at all, just other than to say that you know, we've got these crucial levels and we want to see the prices breaking up above them. And towards the upside, I'm going to just continue to rely on this blue line here that we have had on the chart for a wee while now at 3,518, and towards the downside, opens and closes below 2,896, and we're looking towards those other targets. Now we can look over to the price differential between the exchanges, as we so often like to do. HitBTC is currently $1.59, and the other exchanges are 162, 163, 162. So we're 155, in fact, on HitBTC. Yeah. So we can see that there's still a sort of 6 cents difference, more or less, on the exchanges, and that the prices still haven't fully ameliorated yet there. Do I expect them to do at some point? Well, it's hard to know really, because, you know, this isn't something that that there's a lot of history of really to sort of compare against. But I do expect in the greater scheme of things, if the prices were to move up to bigger prices, then these sort of small differences will seem negligible after a certain period of time. If the prices were to drop right the way down, of course, and 6 cents was to say be 10% of the price, then, you know, you're looking at serious big changes just with a small number of cents. And in recent times, we've had the difference. We've 60 cents and things like that. You know, we've had 20 or 30% type price differences as we were up at our highs over here. So I feel like there's a sort of friction in the market, and that needs to be sorted out over time. And maybe that's a supply issue and whatever else, but we'll see. Overall, we had the full measured move off of our descending triangle here against the dollar prices. And unlike the Bitcoin ones, there's no sort of any debate about whether or not that was a fake out, and we've come back in to retry and continue doing things. And I think that the whole chat on the Bitcoin side of things is ameliorated an awful lot when we look over here towards the dollar price, and you can see that in fact this is more of a dynamic to do with the price. The Bitcoin chat was more of a dynamic to do with the price of Bitcoin having come down and gone back up so much itself. Whereas the dollar price is sort of more static, and of course you'd expect so with Tether and dollar being stable coins as opposed to having two volatile assets against each other. So anyway, we've come down here, and this is what we're looking at. And can we now think to ourselves, right? Well, is this all that was going to happen? And of course, we have these levels that we can bear in mind still, of course, towards the upside and downside. But is that what we're looking at for now, and how about we put on a small Fibonacci retracement here and try and find theorizing that this is the bottom here. This has been the top with these wicks over here in the 20th of February sort of time, Valentine's Day area, and then down to here 13th of March or so for the lows. And where are we right now? And you can see that the price is forming a doji or something right on top of where we kind of need to be. So the question for me right now in the dollar prices is, can we open and close daily candles above or below the $1.56 area? And if so, then maybe we can start to look towards upper or lower targets. So that's really what we're kind of looking at for today. And that applies across all of the timelines as well. It doesn't really matter if you look down the way and it comes to these sorts of things. It doesn't. Well, all we're looking at really right now is the price action and whether or not we can really achieve anything going up the way, and if we'll get past these other resistance areas. So, the next area up from that's 173, next area up from that 186, you could say, 175 if you're looking at this Cyan line on the daily time frame. And then, of course, the 382, which could be where prices obviously just correct as far as and turn around and come back down. Should they manage to make it above this here? Should we manage to make it to the point where we're looking at correction? 190. Failing that, then of course looking down towards the 97 cents area. Thanks so much for tuning in. And well, we can look at the Bitcoin things, but essentially it's all sort of the same. And of course, the numbers are actually slightly different. Currently, we're suppose it's worth doing because the numbers are different and there's the differential in the exchanges, but it's the same sort of deal when we draw in the Fibonacci's. Straddling this at the moment, need to have the prices above 170 on this exchange for us to have made that as a retracement. Then we'd be looking up towards the sort of $2.13, failing that, looking down towards $1 area. So, thanks so much for tuning in, and I'll see you next time.